Hey, guys, welcome back to my video interview. We're gonna be looking at AMC Entertainment taking some more AMC and APE. In today's video, we are going to be looking at a leaked document which shows how Citadels were able to send and where they sent their AMC and HFDs offshore. We're then going to be looking at the recent $500 million that AMC paid off the market condition and also had this 800% increase in AMC and more. So make sure you guys watch until the very end of the video. So of course today is still the Saturday and going to the Sunday Outlook video going. The Outlook video for next week will be out tomorrow, but today I kind of want to discuss about, like I said, the leaked document. So without any further ado, let's get straight into it. So the first thing is this offshore leaks connecting Citadel Ken Griffin and Northern Trust to Hong Kong, UK, Bahamas, Caymans, Bermuda. This is how and where the AMCFDs are getting sent and washed around offshore. Like I said, international scandal. And so what it is basically a cache of leaked documents provided names of politicians and other linked to more than 175,000 Bahamian companies registered between 1990 and 2060, and on this document you see companies such as Griffin, you see companies such as Citadel, and of course this is what they're doing to of course push the FDs away. We recently knew about the 43 million 8 FD and how that suddenly magically disappeared, and this could be the reason why. Now the link to this particular tool will be done in the comments section down in the description. So if you guys want to go check this out, essentially what he did as well was look at many companies when he first started over a company called Macro. And where they opened offices, he also looked into the people who worked in Macros, such as the founding member, such as the board members, and about what they did, the companies that they brought with it. So this was a very, very detailed kind of this research and just due diligence into this, but pretty much what he did is discover in terms of what these companies are of course doing in order to kind of push their money away into the market and hide it offshore. And so what this is of course, firstly this is a big kind of bringing something into the light. Now these are something that we do need to see, because if this is able to be of course tackled, if someone were to actually deal with this problem, it would bring a huge hub for US retail investors. One of the reasons for this was of course, with the feds, we all knew that if they were not able to cover the kids they were actually because of the rule they had to buy these FDs up. But because they were able to hide it away, or whatever they did with it, of course not hitting it, not letting it hit the tape. We didn't see that by pressure coming in. We didn't see all these 43 million shares being bought up, and so this could have been hidden offshore. Now if this is how they did it, if the government or not want to attack these kind of offshore sort of waste, these methods for them to hide these FTDs, it will of course help us as well. So that is of course, another reason why we could see AMC and Apple also going up. But yeah, this was the big thing. Like I said against guys, this will be in the description section down below. You guys want to go check out the whole tweet, but I thought that this was quite big to mention. The next thing we're looking at is the 560 million. So this particular user said this means 506 million is paid off early. So of course referring to the recent 8K released by AMC. Now I do want to talk about this particular 8K is that? Yes, technically the 506 million was paid off. However, they then open up a new loan at 400 million with a slightly higher interest rate. So technically they actually paid off 106 million. Now nevertheless, it's still of course a good thing. I still to be honest think that leveraging and being in debt is still a good thing, especially with a company that is backed by retail investors, because of course we also talked about the recent offering, because the fact that if they were able to of course leverage they can grow their company bigger, and again with AMC the bigger cash back have the more they are of course able to do and grow the company, and so this is still a good thing. It means as they still able to pay off 106 million that they still in a good financial situation, but also the fact that they're still taking out a loan which is paying off at a later date. And so this is just the layout of everything in terms of the fundamentals, mean that the fundamentals is still looking very, very good. Of course you could argue that if their debt was fully paid off, it would be even better, which is true in certain cases. But I still think in this case with the recent 8 offering as well that we are talking about, this already brings them to a very good, a natural place, and being depth in this particular case isn't too bad because it still shows the strong capital kind of leverage, but it also shows what they can do with this. And so I'm okay with that, but I just want to kind of clear this up. It's still very, very positive though. The next thing we're looking at is the current situation in just the overall market. So if you take a look, this is what the current situation is, and like I said guys, this always have an indirect correlation with AMC, and so the current situation we're sitting is bond market posting. Last year since 1920, housing prices falling at fastest pace. Since 2011, Fed is trading on internal information 80% plus of tech stock and bear market territory. Credit card debt up 25% this year. He then later on said recession is an understatement. So once we can of course ignore that everyone has their own different opinion. Now do you think that this is of course a very bad state? But if you just look at everything else as well, even with your own kind of research on your own view, you guys can see that. What sort of situation we are in right now, and the reason why this of course is important is, like I said, against guys, for the companies that are shorting onto AMC right now, what they always use, and a method that they use, is obviously using collateral to ensure to leverage and insure against AMCC. If their collaterals were to fall, it will of course put them in a bad positions. But not only that, even if we just talked about when the whole market drop, we have to bear in mind that AMC won't drop because it's held by retail investors who are not affected by the overall market because they will not sell. Now because of that, it will of course put the short positions and the short sellers in a bad place, meaning that they either have to cover the long positions or they have to cover their short positions. And in this case, I think I'm going to be covering their short positions. But again, it's only my speculation. Like I said, none of this is ever financial advice. So do take risks to Chrome. So make sure do your own due diligence and research. But yeah, I think that this is of course very, very important. And again, this is why we're also seeing AMC being pushed down right now, because they understand that if the whole market was to drop off, AMC won't be a store that goes along with the market. That's what they need to do what they can now, so that if the whole market were to have a crash, water will drop tremendously. They are still able to cover AMC, hence why we're in this battle of downward pressure right now for AMC. Now this is showing National Bank of Canada reports on the 14th of October, an 800% increase in AMC position for 13F report period ending 9/30/2022, and so this is of course showing how much. Now if we take a look at the shares they have, is obviously 471,000 coming in from 15,000, but it is still a big percentage. Now this is not in terms of something that will obviously help us in a big way, but I think that this is showing why companies are willing to get in right now. It also that way reflects the fundamentals of AMC. Bear in mind, reason why AMC was shorted in the first place was because of their bad fundamentals, which of course we can't argue that at the start of COVID that was obviously the case because of the lack of business. But as time goes on, the fundamentals are obviously improved to the point where now firms are willing to also buy into AMC. Now this won't be a case of they have such a big power, it will cause a short squeeze, but this is a good indication and a good reflection of just how well AMC fundamentals have improved. So that's why I thought is a very, very good thing to be looking at, especially understanding that right now the reasoning to short AMC shouldn't really exist as much as before. If you, like I said guys, you could of course argue back to the 500 to 400 million or 506 million like I said previously. But I still think that death fundamentals overall is quite well if we are able to give National Bank of Canada an incentive to of course buy into AMC. And so this is a very good thing in terms of the funding, the reflection of AMC fundamentals. But this wouldn't be a case of what we talked about previously in terms of the big firm coming into AMC and causing that short squeeze, because we gave of course the Volkswagen example where that was actually two hedge funds fighting it out, obviously the long side won. But in this case, while they obviously have longed on AMC, it won't be a same sort of situation, but nevertheless it's still very, very good. And now lastly, we're going to be looking at Credit Suisse has lost more than $5 billion from collapse of over-leveraged climate archives. Now CBS is trying to sell parts of its Swiss domestic bank that runs Zurich stock. Markets of $400 million hotel and considered cause of 5,000 jobs to recoup losses Q3 earnings on October 27. So that would definitely be a good thing to be looking at. Like we said, Credit Suisse right now has a big part in the overall market. Everyone's eyes is kind of on Credit Suisse right now. We could be seeing the potential collapse of Credit Suisse now. We've already seen how of course Swiss National Bank is trying to bail out and recover Credit Suisse, but still they do have certain areas where they might have to shed off.